Welcome back to the channel, Survive and Thrive. And today I wanted to focus on a company that has an upcoming earnings report, and that company is streaming giant Netflix, ticker symbol NFLX. As most of you are aware, there's been quite a downward slide with this company for its per share price. And many of you probably saw the news back in late January when that huge decline happened after their Q4 earnings report for 2021, that Bill Ackman's Pershing Square hedge fund revealed that they bought 1.1 billion of Netflix stake after buying 3.1 million shares in 4 days. So taking a closer look at this article from Markets Insider, this was after Netflix stock had stumbled 40% for the year due to weak guidance and the broader tech sell-off. And his hedge fund, 0.7% stake, makes it one of the video streaming giant's 20 largest shareholders, he noted. Ackman and his team pounced on Netflix stock following its precipitous decline in recent weeks. The company's shares at that time had almost halved in value since peaking at $701 in mid-November and have plunged by 29% in those past 4 trading days alone at that time. The latest decline was sparked by Netflix reporting disappointing subscriber growth in the fourth quarter and warning that increased competition and pandemic-related disruptions would likely weigh on subscriber growth this quarter. Netflix shares have also been caught up in the broader sell-off of technology stocks that week, which was fueled by concerns about inflation and the prospect of the Federal Reserve hiking interest rates throughout 2022. And for me personally, I do not have holdings within this company yet, but it is one that is on my watch list. And if nothing else, I may turn this into an opportunity to swing trade because of the huge decline that they've had. Pershing Square began analyzing Netflix while sounding out its investment in Universal Music Group last year. Ackman noted in his letter, he cited Netflix's subscription model, management team, and pricing power as some of the reasons he's bullish on the online media platform. He also had highlighted Netflix's exposure to the fast-growing streaming industry, its vast and diverse library of content, and its excellent user experience. Moreover, he underscored global improvements in bandwidth and the proliferation of electronic devices that can be used to watch Netflix as key drivers of its long-term success. So really what we want to further understand is where they're headed, and one way for us to find that out is by listening in on their next earnings report, which is going to be coming up this week. If we look at this Yahoo Finance article, we can get some more details in regards to that. So 2 of the major names reporting this week will include Netflix and Tesla, offering an early look at how some of the mega cap technology companies performed in the early part of the year. For Netflix earnings, they are set to report results on Tuesday, with investors closely watching for further signs of a slowdown in the streaming giant's growth after a pandemic-era surge in subscriber numbers. Analysts' consensus estimates are looking for Netflix to have added about 2.51 million subscribers for the first quarter, which would mark the least since the second quarter of 2021. This would bring Netflix's total subscribers to just under 225 million. In the same quarter last year, subscribers grew by nearly 4 million. So we all know that they had quite the surge related to the pandemic, and so now that's starting to wane. And so it will be interesting to see how they report on Tuesday and if there is further decline, because if there is, there could be more of a sell-off for Netflix shares, allowing opportunity for investors to jump in at a better buy price. Though Netflix has already seen subscriber growth slow sharply from a pandemic-era peak, the streaming giant's exit from Russia in early March is also set to further contribute to the deceleration. The Los Gatos, California-based company suspended operations in Russia on March 6 over the country's invasion of Ukraine, and since then, analysts further trimmed their subscriber estimates. We now expect paid net adds of 1.45 million, below guide of 2.5 million, given Russia's suspension. Cohen analyst John Blackledge wrote in a note last week, the firm also lowered its price target on Netflix to $590 a share from $600 previously on account of the lower subscriber growth forecast. So obviously for Netflix, they are built huge on the number of subscribers, and so that is a key driver for them. Other analysts also suggested that Netflix churn or subscriber losses could increase in the quarter after the company announced a price increase for subscribers in the US and Canada in January. But revenue pulled from these price increases could also be used to help Netflix build out bigger content slates and drive growth in less saturated markets internationally, others pointed out. And as this quote states, Netflix does appear to be nearing a ceiling on UCAN, US and Canada subscribers, and is pulling new levers to lower churn, Wedbush analyst Michael Patcher wrote in a note. Subscription price increases in the West should fuel additional content production and growth in other regions, and our bias is that cash flow will turn positive in 2022 and beyond, as management has guided. However, subscriber growth will likely occur primarily in less developed regions at lower subscription prices, with Western subscribers paying higher rates to fund new content. Content dumps, where all episodes of a new season are delivered at the same instant, will likely keep churn high as price-conscious consumers can swap out of Netflix and shift to a competitor service after viewing the content they desire, he added. Sustainable profit growth should continue so long as Netflix is able to continue raising subscription prices, but competition may limit future price increases. But in my mind personally, I think that the way that they deliver instant content for whole seasons actually is an advantage for them, because many viewers want to be able to have that access to the content and not have to wait for a new episode to come out every week. And so I think that gives them a distinct upside over their competitors such as Hulu. Overall, Netflix is expected to report GAAP earnings of $2.91 per share on revenue of $7.95 billion, which on the top line would represent just 11% increase over last year. In the same quarter in 2021, revenue grew 24%. So definitely a big difference from last year to this year. And so that's why I think personally there could be an opportunity for this per share price to go even lower. One positive catalyst is what many of the other streaming services out there are doing, and that is getting into the video game business. I found this article in the New York Times. Netflix buys another video game studio as it builds out its gaming business. The acquisition is the company's third since it announced plans to move into video games last summer. Netflix said on Thursday that it was buying Boss Fight Entertainment, a small independent video game studio based in Allen, Texas, as the video streaming company pushes further into the lucrative video game market. The acquisition of Boss Fight, a mobile game developer with 130 employees, is Netflix's third studio purchase since it set its sights on the gaming industry last summer. The company also bought a studio called Night School in September, and in the month of March, it bought Next Games. Netflix would not say how much it paid for Boss Fight. Netflix does have far fewer development studios compared with companies like Microsoft and Sony, which produce gaming consoles and hit titles like Halo and Spider-Man, and its acquisitions have been narrower in scope. But the deal points up Netflix's emerging strategy as it aims to catch up to its competitors. Even Google and Amazon, also big tech companies trying to break into the gaming world, have a head start on Netflix. Mike Verdu, who was brought on to lead Netflix's gaming push after working at Facebook and Electronic Arts, said Netflix intended to distinguish itself using the brand appeal of its shows, which could be turned into games. A game based on a Netflix hit could interest gamers purely through name recognition, even if Netflix does not yet have a reputation for making popular game titles. Netflix executives believe the company can offer a connection between its popular streaming shows and related games, and stories that they love in between seasons of a show or in between movies, Mr. Verdu said in an interview. He said Netflix would eventually create new original games rather than rely solely on buying games made by outside studios. So I think it is an interesting development and way for them to branch out their business. Only time will tell if this will be a true success. We have seen other companies try and go about this and fail. And so I don't know if this will be a big upside for them, but it may take years for them to develop this. And so with that in mind, this may be one, if you do have a position or are thinking about buying into, that you may need to ride out for a number of years. Closing out the video for today, I just wanted to revisit, like we talked about, Bill Ackman's acquisition in late January of the huge stake of shares that he bought. You can see if we just look at even just the past 5 days, it's already down almost another 6%. If we go into the month chart, you can see that almost $400, so it's dropped another $40. And if we look at the past 6 months and we go back to January, you can see that we were over $600 per share, dropping all the way down after that earnings report to $360. And we're still $20 under that. 46, almost 47% downturn in the last 6 months. And so that's why, like I said, it is one that I'm continuing to watch. I will be watching closely this week as they come out with their Q1 earnings report for 2022. And if there is another leg down, then I may be looking at starting a position with this company. Would love to hear others' comments about Netflix in particular, as well as the other streaming services out there related to stock investing. And let's use this as a forum to exchange information and help each other out as fellow investors in the YouTube community. Make sure that you hit that like button and subscribe so that you can be notified of content as I upload week to week. And as always, be good, look for those opportunities to build your wealth, and don't just survive, thrive!